Yes, I've started the meeting.
Downloading on your own laptop.
Yes. It said the cloud is full. So I needed to download on my laptop.
No problem. It's not okay with you. When you come here, it is hard and you know this thing we say you do for you have to do what free from Zoom, free from Zoom, and now whatever you can say something there. You go and get it then when it's done. No, after this, okay. There to be this. Just that that's that they that you want to help the box to activity money. You have the letter for it. You very clear. We used to have our leave the comment. To God's will.
Good morning, ladies. Good morning. Good morning. Can you hear me? Good morning, everyone. Good morning. Okay. Yes, we can hear. Yeah, I wasn't talking earlier. Thank you. Okay, so let's give another 5 to 10 minutes for others to join before we start. Thank you. For the submission of the business model Canva, please send it via email dealwoman@dealroomng.com. So we'll review it. Please, if you have one before, transcribe into the model we've given to you. We want to be sure that you've done it and you understand it before we ask you questions. All right. It's not a copy and paste thing. We want to write it. All right, so we'll give you another 3 minutes and Okay, I think we've waited enough, right? Right. Good morning, ladies, again. How is it going with us? Hello.
Good morning, ma.
Good morning. Good morning. Can you hear me?
Yes, ma. Good morning, ma.
Good morning,
Yes,
ma.
ma'am, we can hear you. Good morning,
Yeah.
ma'am.
So is anyone having challenges with their, what do they call it now, the business model? Any challenges?
Yes, so.
Okay, so let me take it because the next session is very important. So let me hear you. What are the challenges? Who wants to go first? So who is going first? Who is going first? Who has a question to ask? So we don't have questions, we're okay. Because we're at the point where we'll drop off the first set of people and move on. So I don't want to drop anyone. So who is having challenges constructing has? Yeah. Okay, yeah, go ahead, please. Good morning.
All right. Good morning, Ma. Thank you so much for everything that you have been doing. So my thing is not actually a challenge per se. It's about the fact that while populating the canvas, I saw that there are some things that are showing up as both revenue streams and also like customer sorry, Ma, as a channel. So is it possible for something to be a revenue stream and also be a channel for us to make sales at the same time? So that's one of the things, because it's making me feel like if I write it somewhere, I should not be able to write it in another thing. So that's what I wanted to clarify for us. Thank you very much, ma'am.
So there are two different things. It may sound alike. I get what the question is. So, but they are different things. Revenue stream is how are you making money? Is it by sales of something? Yeah, so your channel will be selling through something. We sell on Instagram. So your revenue stream will be direct selling. But channel is to tell us how, where the sales is going to go through. You get the difference?
Yes, ma, I get it. So can I use an example, please,
Okay,
ma?
good.
Because what the thing was that in terms of revenue streams, as a business, you know that one of the good ways of making revenue is by referrals, like when somebody refers you to somebody else. So I was confused whether it's possible for me to put referrals as a channel
No,
instead of just.
referral in this context is not a revenue stream. It is how
It's
you
a
will reach
channel.
your customers.
All right. Thank you very much.
Yeah.
Yes, thank you very much. I would edit that. Thank you, ma'am.
Yeah, thanks. Right. So any other question, please, clarification, confusion, please? By the way, we were in a meeting with the bank. We don't want to tell you the bank. They are interested in funding women here. So we are now very excited. We had a very high profile meeting this morning with a bank, one of the commercial banks. So please, let's take this seriously. We also have an approval we got yesterday for a training at one of the Microsoft centers, and we'll be teaching on artificial intelligence, social media. They even promised to help set your website up if you don't have, etc., etc. So please, I'm rooting for you guys. Make us proud. So when we meet next week, our per week meeting will be at a Microsoft Center. So we're trying to finalize all of that. Yes, yes, yes. So let's really work hard at this. We will get the funds we want. We'll stabilize our businesses. We promise you. So please, let's go on to the session for the day. Yeah, Chigozie is whoa. We too were thanking God. We're like, oh, okay, that is making sense. We also have something going on with the for those of us that are startups with the American Business Council. We intend that you'll be able to want to set up outside of Nigeria. It will be possible and easy through the DealWoman shortly. So this is just info in-house for the ladies on this call. Right. Okay, any questions on the business model? That activity takes you to next week. If we don't see it, if I don't see it, you're not coming into class. Or we assume that you got F9 and you have to retake. Any questions? All right. Peleowo, you can go ahead, please.
Good afternoon. Hello.
Yeah, I can hear you. Go on.
Good afternoon. Yeah, I think I'm really new in everything, though. I just
you have
joined
to go join the cohort too.
I just joined. I just joined the cohort. I think I'm really lost. What has transpired?
Join cohort 2. If you have lost, please just join cohort 2.
How do I join the cohort 2?
You step out on the community. You see cohort 2. Ask to join.
All right.
Please, if you're new and you know you can't, if you don't go through if you didn't go through with us from Monday, please just join cohort 2, please. It's better in your own interest, so that it's not about how fast you finish or just running through. No, we want to ensure that whatever we churn out from this accelerator is strong enough to raise funds anywhere in the world. Right, Chigos, go ahead, please.
Thank you, ma'am.
Yes, there will be a feedback to the BMC, yes.
Please, I want to find out for the assignment, what email are we sending it to? And then is it today that is the deadline or?
DealWoman@dealroomng.com. We'll drop it again. It's on the group chats already. You see it in the group chat.
Okay, and is there a day for a deadline? Is it like today or tomorrow that is the deadline?
Today. The best we can do for you is when you hear on Monday, you have it.
Okay, but we can send it over the weekend.
You can send it over the weekend, please.
All right, ma. Thank you so much.
All right. So, Pelewo, your hands were up. Have I answered? Okay, yeah, I have. Okay, Victoria. Hi, ma. Good morning.
Good morning, ma. Good to see you again. So, ma, you promised that we are going to get your last teaching on the YouTube.
Oh, yeah. So we've been having issues downloading from Zoom. So sorry. I've asked them to apologize to the group. I've been in several meetings this week, so I wasn't keeping abreast, and one of us is seriously ill. So we just a bit of so Faith is on it now. You should get it today. Faith, can you speak to us? Is it ready? Can we get where we are with the previous sessions?
All right, thank you, ma'am.
Yeah, we truly apologize. We would have sorted ourselves by next week. So sorry. Okay, any other question, any other feedback, something we should add, we should not add? No. All right.
Still,
okay, any other questions before we move on? So today we want to talk about, so our run slides is not a PowerPoint slide, it's actually a paper that's just trying to talk about evaluation and sustainability. Let me share my screen now. Where's that? Comprehensive analysis. Yeah. Can you see my screen? Can you see my screen?
Yes, ma. I can.
yes, ma'am.
Great. So we want to talk about something deep. If you've built your business model and taken time to study it, you realize that it helps with evaluating your scalability and growth. And we tailored this for Nigeria because we thought that, look, there are a lot of stories around scalability. So we narrow it down to our country. And so this paper covers all of that. Now, it is equip you with the knowledge and tools to access business scalability and growth potential, crucial for attracting investments in local context. So we're looking at the analysis includes definitions, key factors, metrics, frameworks, case studies, probably if we can cover that today, exercises. So I'll run this for 1 hour. We'll come back again, maybe another 10 minutes, and then we'll take another 1 hour. So it's going to be a 2-hour session. Please, your paper and pen once again, and questions. I'll be delving into strategy around your business, what investors are looking for, yes, as well as how you actually evaluate yourself and measure how scalable you can go in Nigeria. Now, so that I don't bore you, it's a paper, so it's test. So given the situation in Nigeria, we've tailored this to align with what's happening right now. So I'll talk a lot more on my head and ask you a lot of questions based on what you are experiencing, and then we can talk about it. So Nigeria faces a lot of issues that has to do with our own unique challenges, power supply issues, the bureaucratic hurdles, issues around how we're in. Okay, so I need to, sorry, my phone is not supposed to ring. Let me adjust that. So I apologize. On silence, right? Okay, sorry, my phone is not meant to ring out at all. Okay, so I apologize for that. So we have a population of 200 million plus. If you look at the current manufacturing index, about 7 million businesses have closed down in Nigeria since 2023, or is it last year? it's really a bad situation right now in the country. So I must give it up to us that are here, whose businesses are among those thriving. So our course material, this course material is structured into 8 sessions that is going to be addressing the aspect of evaluating scalability and growth potential for Nigerian businesses. So is this moving? Right. So what are we talking about in terms of scalability? This is the ability to handle increased demand without proportional cost increase, relevant for Nigerian businesses like e-commerce platforms that are facing rapid growth. How are you able to manage demand for your products without increasing your costs? Is an evaluation you need to be able to do on your business. So what is the growth potential when you're talking about scalability and growth potential? We mean the possibility for expansions driven by our markets and increasing internet penetration, etc., etc. So there are a lot of things, there are a lot of people going online. Nigerians are one of the fastest, largest users of internet globally. Our people are very internet savvy. So how is the possibility for your own growth as a business, your internet penetration, your websites, your social media, your WhatsApp, your use of AI tools, how to grow your business through that route? Now, why did we go to Microsoft, for example? We thought that, look, based on the questionnaires you filled and the way some of you have answered us, we realized that like 50% of everybody on the accelerator that has registered. So we have like almost about 100 plus that registered for this event, for this session. But we think we got about 60 plus into the accelerator itself for cohort 1. And we did the analysis for this 60. Almost 60% don't have a website presence. And some have done years of business and they still don't have online presence. The growth trajectory, you can't see it. There's nothing you're doing in 2025 and beyond that you will not require to understand your internet penetration and how it affects your business. Nothing at all. So why is this important for investors here? Investors in Nigeria are seeking businesses that can scale rapidly and profitably, especially in sectors like tech and agriculture. There are links there by some of our partners, and it borders. When I was speaking to the banks, I said, "Oh, investments in the last mile agriculture is not very, very profitable in Nigeria." And I say that all the time, and some people were like, "Oh no, but I'm in agriculture," and a lot of women are in agriculture. Yes, I have a deal, a startup that is in agriculture that went into agriculture, poultry, and all of that. Is one of the people that has been signed off by EFCC, right? And when they came to us, the situation was really bad. From those that are working on the farms to those that are coming out. The question is, it's so difficult running agriculture at the last mile. So, but would I say you should not? So for example, the guys I buy eggs from, I buy directly from the farm. They will not even attend to me. And I say I need 5 crates. They will tell me, we are exhausted. You will even pay them. They will not deliver. They will even give my own because I'm not a commercial person. So there is need for egg in Nigeria, for example. So it's very important for us to get into the investor's head. And please remember, when we talk about investors in DERA, we are simply talking about PEs, VCs, that's private equity investors, venture capital investors, banks, finance institutions, microfinance banks, institutional development institutions like DBN, BOI, etc., etc. So the investors wants to see your scalability and your profitability. And your scalability is how you handle increased demand without cost increases. Growth potential is the possibility for expansion driven by Nigeria's large market size and increasing internet penetrations. So we intend to send this. We don't also want it to be too much of a paper PowerPoint session. We want it to be able to be a doing. So when you are looking or reviewing your PowerPoints, your business model, this is very important. So the other thing, the importance for investor readiness across scalability is the fact that, as we speak to this topic, is the fact that demonstrating scalability builds confidence in potential for high returns. So it's crucial for securing funding in a market with high competition. Now, Nigeria has a very competitive market, even though we have a lot of people. And China is a heavy competitor. China can literally replicate anything you're doing. Anything. They have started producing gari, then kuli. Like, okay, and they will do it better, they will package it better, they have cheaper funds, they'll scale it, you know. So we have internal competition that actually influences how big you can go as a business in Nigeria. So, but demonstrating that you can scale shows to the investors that they build confidence to show that, you know what, they can get their returns back, or there's higher return investing in your business. Somebody asked me, so I had a pitch, I had a screening session. We had a screening session this morning with a tech startup. They are a tech startup, but they also do like logistics. And I was asking the founder, I said, what part of your business would drive returns? What part of the business model will grow? Because they are different revenue streams. He wasn't able to give me that. And I said, see, if you go all over the place and you do this, you do that, and you cannot pick which one is your main income generating unit or product or service, then we're in trouble with raising money. Because that's where the investors will be looking at. How do I get my money back? So because this is DERA, is Investor Readiness Accelerator, it's important for us to look at how how the investors' confidence is being built up when it comes to your ability to scale, and how are we going to be evaluating this, or in some cases with some of us that are here, how do you scale a business in Nigeria? Now, by the way, some people scale into profitability, some people scale elsewhere. Jumia has leveraged technology to scale across multiple channels in Nigeria. Jumia, we know. Jumia also has its issues with us scaling because there is a part of the market that Jumia wasn't prepared for, the last mile delivery and the warehousing. That has affected their ability to be profitable because they were bringing in an Amazon strategy or business model into Nigeria and did not realize that there is a peculiarity of logistics on our roads that is not in the country where Amazon is operating. It's simple. So if you do logistics, for example, and you're dropping, I mean, you have to use your dispatch riders to dispatch something. The timings are not the same. The way the delivery is done, so many people have issues. I have so many SMEs complain to us, oh no, they don't meet up, things are not run. And the clients also, they're like, you know what, the cost of buying is even expensive. I have to pay 3,000 for it to be delivered. So those are peculiarities, but again, they've been able to scale across Nigeria, expanding from Nigeria to other African countries, showing market demand and operational efficiency. So you're looking at the efficiency of how you operate from the Jumia model. So you need to look at it in your business. We in the deal room, for example, we're busy refining our operational efficiency. When they ask us, are you a tech startup? We say no, we are not, but we are planning to be. Now, when we started out, we didn't want to be a tech company. It was deliberate because we thought that, that this was pre-COVID. We thought that, you know what, people want to sit with you and see and holding through. So many of them can't take so many of these decisions on their own until they see an expert one-on-one. Post-COVID, we had to retweak that and see in different strategy sessions, running different models to see, how do we become very efficient? So we are now started to say that we are a tech company because we need to utilize at least 80% technology to run our business going forward. But we'll be heavy on our 20% on ensuring that we can have that in-person, non-virtual requirements that the Nigeria industry also would require from us. Andela, these are big companies, use a scalable model to train and place developers globally. So why am I using these examples? The question is, you want to use things that are working, models that are working to model your own business. So this, for example, is how would you reach your business? Before now, we have to, you need to knock people's door. You need to do a whole lot of knocking, maybe head of sales, have this marketing team. You see them in cars all over the place. You see that is reducing drastically. So that means that your new marketing strategy or go-to-market strategy will be, for example, having a social media manager in your office than a head of sales. I see that a lot. A business that is trying to expand will now have head of sales, head of business development, traditional head of business development. I'm like, what's the person doing? And he drove to Oshogbo. Really? To do what? To talk to people in Oshogbo. So why would we want to put 2, 3, 4 people to drive all the way to Oshogbo? If we can have a strategy where we can talk to Oshogbo without driving. Now, that may not be what your business needs, but question is, do you actually know what your business needs? So Andela uses a scalable model to train and place, so they demonstrating growth potential through human resource development. So that's their own strategy. So there are challenges in scaling. That is, failure to adapt to digital trends is a lesson for Nigerian businesses, especially if you want to remain flexible in tech-driven sectors. We want to be flexible. Now, A lot of the time we'll say, we're not a technology company, I'm not a startup, I'm not in a, the model they are using, please utilize it for your business. Which is why on this program, we are not focusing so much on business plans as getting a fantastic pitch deck, which can also be used in lieu of your business plans, that libre. Because if you pick the volumes of your business plan, put it on PowerPoint alone, you have something more techy in look. So when you now distill it a bit and maybe just try to summarize quite a number of things in another version, then you have a proper tech pitch deck. The earlier you utilize technology that is available to you by the way, you can do a lot of things with your ChatGPT that you already have. I use ChatGPT, I use Grok, I use Gemini, and I use DeepSeek. 4 of them. So they all can do different things. So this business model, if you speak to the AI based on what is rolling in your mind, it will design it out for you. So, but if you do not know what you expect, that's where the problem will lie. But I'm saying it to say that and emphasize that we must, based on what investors are looking out for, begin to scale our businesses and look at what are we aware of in terms of what big businesses are doing. The new big businesses in Nigeria are not necessarily oil and gas. They are technology companies. So beginning to talk about Paystack, you're beginning to talk about Jumia, you're beginning to talk about Flutterwave, and a lot of other things. If you want to go into exports, you're going to have to be talking about a whole lot of digitization around what you're doing. So you need to be flexible, is what we've seen as those examples here. So I'll go on. What are the key factors for evaluating your scalability? In Nigeria, research suggests that factors affect scalability based on long-term growth. So the market size, market demand and size. Your market demand and size is affecting how we evaluate your scalability as investors. So, for example, Nigeria's e-commerce market is projected to grow from 9.5 billion to about 16 billion in 2030. The links are there. It's 9.7 billion USD, converted to Naira, that's trillions of dollars, quadrillions of dollars, Naira, to 16 point something by 2030. That's just 5 years. It's going to go by almost 100%. Almost 100%. That's market demand and size. That means that a whole lot is going to be happening via the e-commerce channel. So if an investor, and we have this data, so because of this data, when I'm trying to look at how I will invest in you in the next 5 years, I'm assuming, how does it fit into this data that I'm seeing right now? Your business model must handle increased demand without significant cost. Like SaaS means software as a service models, common in Nigeria. So like Flutterwave, we have a lot of SaaS in Nigeria. Why? They are, and that's why you will ask, why so many entrepreneurs ask us, why are they giving startups? Why do startups get money and we SMEs don't get money? It's this thing, your business model does not capture how you will increase demand without increasing cost. So when you're designing your business model, especially when it comes to key resources, your cost elements, and key activities you'll be doing every day, At the back, in fact, not at the back, at the front of your head will be, how do you increase demand or handle demand without increased demand without significant cost? Some people are manufacturing. Oh, a lot of people are buying my products now, so I want to open a bigger shop somewhere. Really? So we need to ask a whole lot of questions in key factors that you need to look out for. Your operational efficiency. How we will analyze your process for automation. And there are crucial given challenges like power, with companies like Jumia improving logistics, you know. So power, how are you utilizing power? Now, I would like to stress here, I don't know if I'll get to it in the course of this session. Investors are looking for your ESG. Please write it down. ESG. So ESG means what again now? They're the economic variables. Your ESG, please, can you give me that's run out of my head right now because it's not on my slide, it's somewhere down. ESGs, let me explain.
Environmental, hello?
Yeah, your environmental.
Sustainability and governance.
Yes, environmental, social, and governance. So the investors are looking to invest based on that. It's beginning to be very common because every fund, it has these requirements, I don't want to use, I just want everybody to understand it. So when they give a bank fund, say for example, African Development Bank gives GTB Bank funds for women. And you hear, oh, there's an accelerator, we're going to give 200 women 10,000 naira each. Is an ESG that is answering to. There are ratios that are being calculated for that. So why did I bring this up? If you work on your operational efficiency as regards to power, for example, there are carbon credits you could get if you know how to calculate them. So for example, if you use solar instead of diesel or fuel, and you have this calculation or the metrics done on how much of carbon you are able to take out of the system because you are using solar, you actually earn more money. Maybe tokenized in the international markets, but here, what it means is that if you can reflect that in your investment readiness document, you could actually get more money or easier for you to get more money. So the key factors in evaluating your sustainability as a business from the investor's perspective is your operational efficiency. How automated are you? How easy are you doing or executing? So as you write your business model and begin to, so at the end of today, I'll ask you to open this PowerPoint. Now I told you guys to open it up and have your business model. The next page is you start to building blocks of your business plan or pitch deck, as it were. So there's one or two things at the end of today I'll ask you to put in PowerPoint on your next slide after your business model. So it will be your market demand and size, how you're working, but I'll give you like an activity at the end of the day. So there's an activity down this portion here. So operational efficiency. Also, how do you improve your logistics? How do you handle your growth with that? How do you execute your business? A 12 hours generator. What do you do? How do you want to be efficient at that? They also turn it on in the morning I came into the office after reviewing our audits for last year, and I said, our diesel use went up. In fact, my auditors were like, why? How do we explain that you went 100%? And I said, well, I can Can everybody hear me? So sorry. Can you hear me? I'm back, thankfully.
I hear you now.
Yes.
Yeah, the network is terrible. I didn't even know that I stopped talking. Oh my
Sorry.
God. Right. So I guess I stopped where I was talking about the ESG, right?
Yes, ma'am.
Yes, you're talking about when auditors came to your company regarding your usage of your alternative power, something like that, at that particular point.
Yes. And then the power then happened. Can you
Yeah.
imagine? All right. Thank you. Okay, so I'm back. All right. Okay, so I was saying that so this needs to go down. Right. Operational efficiency in terms of power. So what did I do? I said to the team, you know what? Since we have power this year to make up for the 100% we went through last year in terms of we incurred in terms of cost of diesel, this year we have to do just 3 hours. Everybody 3 times in a week. We've been doing 3 times in a week work. We work on site 3 times and 2 days of work, or keep at it. And then whenever we come to the office, if there's no power, we run the gym for 3 hours, that's it. We're done. 3 hours max, we're done. And we've been keeping to it for some time. So hopefully we ensure that we bring down or maintain our cost, even though we have more need for power, we have to be efficient at that so that we don't have that figures and we can justify it. So another evaluation that will come up will be human resources. We want to evaluate workforce stability. Considering lower labor cost in Nigeria, let's go again to this Andela model and the China model. China. Is it Chinese people bringing their money here? But if you go to why industrialization seems to be prospering in China, it's because of the cheap labor. If you want to invest, if you want to manufacture, for example, in the US, it's very expensive compared to China. The same thing with some of us that deal in apparels, importation of clothes from Turkey, from where again? I think is it Venezuela? Where do they get clothes from in Nigeria? Yeah, I know somebody brings in cotton from Indonesia. You know why they do that, but it's because it's cheaper. Labor is cheaper. Now in Nigeria, I was doing an analysis on Just Right some years ago. Just Right. Is it Just Right or no? It's not Just Right. I've done an analysis on Just Right. It's Biggie, the producers of Biggie. And I was asking a group of analysts, I said, why do you think that Biggie has succeeded in Nigeria? Why? This is a company that competed strongly against Coca-Cola, because they have the Biggie Cola and there's Coke. And it seems like they've come to stay. In fact, they've come to stay to the point that we had an event and I had reason to visit a hotel so often last year. Everything there was Biggie water. I was like, when did we get there? Where's Eva water? I thought it was used to be Eva for. We paid for the oil and they gave us water. I'm like, what Biggie? What's Biggie doing on the table? Somebody just says, comfort, calm down. Biggie is now Biggie in Nigeria. I don't know what you're saying. I just chilled where I was and I remember that analysis and I said, good. The strategy is working for them. You see, rather than cluster the manufacturing hubs around Lagos, they went into somewhere Ijebu Ode also. And one of the analysts said to me, comfort is because it's cheaper to get workers there than it is in Lagos. And so it was part of their sustainability model. And it's paying out for them today, I think. I don't know what their analysis looks like this period. So your human resource, how you scale human resources is very important. Considering lower labor cost in Nigeria, for example, Andela's model of training developers as a scalable model, you can decide to start training your own people. You can decide, because at times recruiting very skilled hands may not be it for you, maybe it, but we are measuring how you are able to manage your workforce. And now, like I was saying to one of my partners 2 weeks or 3 weeks ago, we have a very serious challenge on our hands. A lot of Nigerian young people are so focused on two things. Either they are focused on technology and anything around technology, or they are looking to just get out of Nigeria. So question is, where will small businesses get this labor, you know? And then even the ones that don't, except you just want to have casual workers and factory workers. So what strategy are you going to employ? You have school. I remember one of the schools we analyzed, they had like 50-something staff for about 300, 400 children. 50-something staff, like what? That's a lot. How much are they paying in school fees? So how do you? So one of the schools have been able to ensure that the people that have started with them has been with them for years. I don't know how they do it. I don't know. So simply looking like they may not be paid in cash, but they are being paid in other things that keeps them coming, and they seem to look like they are happy to stay, you know. So for us in the deal room, we've done more about sourcing so many of our work than recruiting heavily because of the dynamics of what we do. Our average salary, as small a team as we are, is opening up to about maybe 20 million if care is not taken, you know. So you don't want to keep recruiting. So we're very particular about partnerships, about contracts, about internships, work a lot with interns. In fact, the other day somebody said, how do you get young people? I said, for years, I've always worked with NYSC. I'll just write NYSC. I have 2 young people, 2 smart people, and I need them. And this NYSC model works. So many SMEs don't know. NYSC, they are with you for 1 whole year, 1 whole year. They can do a lot for you because they are graduates. So go to NYSC. I've used it in organizations I worked with as investment bankers. We want top of the top in NYSC. We tell them we want first class. I don't know if they still do that because I know I rejected an HND once and they blacklisted my company. Because for investment banking, it has to be either first class or 2-1, and you should be in the numeric field. So we're very particular then. I had to write NYSC again, so okay, we apologize. And then they withdrew the blacklisting and still sent us an HND, who was, again, very smart guy at the end of the day. So question is, how are you managing your workforce scalability, evaluating it? Because at some point, you see some financials, they pay a lot of people, they don't get value. I sat in a strike session where the accountant was reading, I'm like, this guy is earning a lot of money here, and this is what he's churning out. I mean, but again, it is what we look at for what investors are looking for. Then, assessing supply chain capacity. Supply chain, note, your logistics can account for 30% of sales in Africa. This is data. So when you say you have done your business for 20 years, you are running, you are telling us you've been successful, really, we're going to check what percentage of that is your logistic cost of sales. They say it's 30% in Africa. higher than global averages. So you need partnerships. You need quite a number of things. So you need by now to be running your SWOT, your Canva, your PESU, a whole lot of things to explain all of that. What are your strengths? What are your weaknesses? To ensure that your supply chain is high already. So if we take an average company, maybe it's going to be 40%. So they are going to be looking at that. Then your IT infrastructure. We want to see if your system can handle the traffic. For us in the deal room now, our system is able to handle our traffic where we are. In fact, we came into 2025 with like, oh no, deal room team, you guys need to work. So we've engaged project managers to see how our website become more dynamic. We can do a lot of things back end because we are like, okay, our business is really, really picking up from when we came into 2025. Question is, our infrastructure doesn't cover where we are right now and where we're going. We've always known that since mid last year. So this year, we have earmarked funds for different things, cloud solutions. We know you will need that, is why we quickly are talking to partners in Microsoft. Because, for example, I'm going to ask you to do that today because we want to talk about your data room. You need to have a Google Drive or a OneDrive under Microsoft 365, where everything about your documents that investors will need, you will be dropping it there. This model Canva, I want to see it there. You send me a link and I'll look at it and ensure that your data room is okay. So question is, can you handle the increases or the would-be projected increases in your business? We're going to be looking at it as part of what the investors are looking at in terms of assessing your scalability and how we measure it or evaluate it. What are your technology infrastructure? Do you utilize AI? I was doing something for DealWoman and I didn't want to, I was like, okay, video. I've done some videos. I smiled, okay, my social media marketing team will say, oh, you have to push the video, you have to sit down, hello, welcome to Dira, welcome to that. I'm like, it's not my thing, but I'm learning around it, you know. And I said, oh no, there must be something on AI that will solve it. I'm sure they solved it. I just went in video and then prompted it. I want da. And it gave me I'll send you what it sent. Welcome to the DealWoman Investor Readiness Program. I'm like, okay. Beautiful. So I have it. I didn't have to bother myself about it. Well, the only thing is that it now requires me to pay in dollars, which is the challenge we have as businesses in Nigeria. So I'm talking to all our technology people that care to listen. Let's build something for Nigeria. If there's a technology that can convert my text to video, do I have to pay dollars to be able to access it? And those are the peculiarities for us in Nigeria as a nation and as businesses that are operating here. Okay. So I've jumped ahead of me. Please, if you have questions, please. This is a case study. So key factors for evaluating, let me drop this down. Right. So what are the key factors for evaluating scalability in Nigeria? 1, market demand and size, business model, operational efficiency, human resources, supply chain, and IT infrastructure. Please write down, when you have your sheet, you're going to crop up this one, and you're going to speak to this scalability and efficiency metric. That's what I would call it. So you tell us how this affects your business. Be writing it down, ask me questions around it. If you have questions around it, let us know how this affects you. So these are the factors that are being considered for evaluating scalability in Nigeria. So when an investor is looking at any business in Nigeria, whether they are bank CEOs, angel investors, people that love you, that want to support you, they are going to be assessing you based on these factors. Based on these factors. So I'm going to go to, have I done one hour, Faith? Faith has not responded. Please, I need her to talk. Where is she? Is she here?
1 hour, 22 minutes.
1 hour, 22 minutes. Good. So can we take like 10 minutes off this session and try to see how these metrics, maybe I'll just crop it and put it on the group, how it affects your business. Where are you with it in terms of being able to evaluate your scalability? If you are able to answer this, it also helps in understanding the health of your business actually, and also measure your state of investor readiness. Putting that down here. Right, so I think I'm putting it down. Let's hope that you get it. I don't know. It didn't drop nicely. It didn't drop nicely. So, Faith, please pick this up, put it on Word. I'm dropping it for you. Yeah.
You can take a screenshot, ma.
No, it's for you guys. So you could, can you still see my screen?
Yes, you can. Yes.
Yeah, so you can take a screenshot of that. And,
I can't hear anything. Okay.
right. So we'll try to drop it quickly so that it's easier for you to pick. And then, so just look at it, draw around, have a bit of reflection in what you're doing in your business, and we'll come back in the next 10 minutes. So that's about, let's say, 134, 135, right? Is that okay?
Yes, ma'am.
Yes, ma'am.
Okay, so 135 will be back.
Ma'am, I didn't get the instruction very well. Network.
Oh, okay. So I said you could still see the, you can see, I'm sharing my screen. You can see my screen.
Yes, ma'am. I can see your screen.
Good. So I'm saying that, sorry. I said the version of key factors for evaluating scalability in Nigeria. So key factors for businesses, sorry, that's what it should be. Key factors for businesses evaluating their scalability in Nigeria. Pick all the items here. Let me pick it again and see if I can paste it as a, and see how it's affect, what's your position like when it comes to your market demand and size? So where is your size right now? Reflect on this session. Your market demand, the size of your market, do you know it? What's the market size like? We're going to delve into it. So when we go down, you see the sum tam version of the breakdown of the market size. And then you ask yourself, the business model you've built, does your model, does it have the capacity to handle significant demand without necessarily increasing your costs? Because sometimes businesses think that they will increase their cost because a lot of people are buying my product, so I need to buy a new machine. Really? So many times it's not buying the machine, it's just utilizing a nice business model or structure for you to be able to match that demand. Then the operational efficiency, processes optimized for growth, your power issues, your logistic challenges, how you run your business, how efficient is it? Then your human resource, labor costs, bringing in people, technical people, non-technical people. If you're starting, what will that cost look like? It's a reflection analysis. There's supply chain. It's high. What will be your cost of supply, for example? What does it cost you to deliver on your projects, on your business, on those products, on these services? You're looking at your IT infrastructure. How are you engaging? What interact? How do you keep documents, data, etc., etc.? So reflect on it, and then we'll come back to continue.
Thank you, ma'am.
Because we're not, yeah, so let's look at 140. I think this is 128. It's 130 already.
Thank you, ma'am.
Sorry.
Thank you.
If you have questions, I'm still here. Questions?
Yes, ma. It's Ejiro, ma. Good afternoon, ma.
Good afternoon, Ejiro. Yeah.
Yes, ma. So I understand everything you've said so far, talking about reflections. So, but my question again is for a new business or like something that's in the ideation phase. Is it okay to use already existing data and projections?
Yes, it's a reflection. Use it when we ask in the class. We will. That's why there's an in-house or session next week where it will be bordering around your scalability, your sustainability, and your business model. That's what we'll talk about, because that will now help us to drive into the metrics of your financials and what we should actually be looking at. Yeah, we are taking attendance. Faith, please drop attendance if she hasn't. Did I answer your question, Ejiro?
Yes, ma. Thank you, ma.
Yes, ma'am. Thank you. Okay, so we'll just take a bit of break and we'll come back. So 140, we are back here. Please don't drop off. Okay. Are we back? Hello?
Yes, ma. We are here.
Good. Any questions? Do you have any questions? Is there a bit of clarity in terms of how you are measured? Any questions?
Yes, ma. I will really need more clarity on each of those topics. Tallying my industry, which is hospitality and food services. And not that if I use your recommended tools like AI, I cannot really get some wealth of maybe some experiences to work on. But I think we also need some exposure to the, exposure per se to help us, answer these questions to how our business is related to it, ma'am. Thank you.
Okay. So what we'll do is, this is a build up to what happens next week in terms of when you're doing your financial projections and your pitch deck or business plan. We will infuse a bit of business planning into this. We didn't want to do that before, but we see that there's a need for it because a lot of people need that. So we'll fuse a bit of business planning structure to it and probably drop a template for it as well. But we'll see how that goes. But these key factors are needed when it's what you are being evaluated on by both the banks, even yourself as a business, your board, if you have a board, or your management team should assess yourself based on this. So when you want to really run a very strong organization, you assess yourself based on your market size and demand, your model, your efficiency, human resource supply chain, and IT infrastructure. There are other things, but these are critical to where most of these businesses in the accelerator are right now. Okay.
Okay, ma'am. Thank you for that.
Yeah. So you can see my screen, right?
Yes, ma'am.
Okay, so what are the measures that you need to measure when you see that these are financial terminologies now. So when you're talking to your accountants, you actually are asking them based on your business, these are the things I want to measure that shows that I'm actually scaling and growing, or I have capacity to scale and grow. A lot of the time you do your financials, you do it for audits, but you need to do for different things. So number one, revenue to employee ratio. There's a research that was conducted in 2016, I think. Nigerian companies generated 63 million naira per employee, reflecting lower labor cost. So that means that per employee, I don't want to read up all of that. In 2016, that's a long time ago, so I won't even stick to that data right now. We need to find a recent one. Revenue to employee. So what's your per employee generation based on your revenue? So you know when you do when you calculate your revenue, you are calculating your revenue based on the business. But imagine that you share that revenue based on the amount of money you pay and the activities of your employee. A lot of us will go zero in losses. So how is the revenue per your employer? Nigerian companies with the highest revenue per employee. So maybe you have, so that helps you to begin to track who is really working and who is not working. the customer acquisition cost and customer lifetime value. Remember, these are metrics for measuring how you are scaling and growing. Is what investors are looking out for to invest. So let me go back to point one. If your employee, your revenue to employee ratio is very, very small, it says a lot of things, but more important, an efficient workforce. In some cases, that figure is skewed to the business owner, the CEO. You are the only one working. So there's a key man risk issue. So because if we take you out, and I say that all the time to my team, that I don't want to be the only one being able to bring customers or earn revenue around the organization. I'll be saying it. Because that means if you remove me out of the equation, there's no business. If an investor sees that, they run. Key man risk. Except they are now going to say, okay, I'll take a seat on the board, or will be involved in finance, which a lot of business people find very confusing when you now have to okay, a new person is going to sit on my board. So many people are comfortable with it. So let me go to customer acquisition cost, CAC, and customer lifetime value, CLV. Average in Nigeria is e-commerce is $50 to $130 global, but in Nigeria, due to market dynamics, CLV needing to exceed CAC for profitability, I will explain. Customer acquisition cost. What it costs you to acquire a customer. Somebody now pays ₦1, but you have spent plus social media, plus your sweat in the office, plus everybody that was working, you have spent ₦3. You are not technically profitable. But if you look at baseline profitability, oh yeah, we made sales turnover of ₦20 million. 20 million. How many people did the job? 100 people. 100 people did 20 million. Divide 100 by 20 million. That's all you people can generate. Meanwhile, some people, there are 3 people. They generated 100 million. Investors will say, go to those ones that did 3 people and generated 100 million. Leave these people that are doing 100 people and generating the same amount. Or it costs you, so that's the first one, revenue to employee. The second one, customer acquisition, you are like, you spent ₦100 to make ₦1 per customer. And see, there's problem. So we need to, so what are the key metrics? So when they ask you what's the revenue, so investors will sit down behind. Because you are not calculating it, they will calculate it. We'll sit down and say, see, what's their revenue to employee ratio? Is 1 to 50. 1 to 50. We can't do that. If it's 50 to 1 now, it have made sense. Leave them. What's the alternative? They go to number 2. What's their customer acquisition cost? It's ₦3 to ₦1. It costs them ₦3 to acquire ₦1. One customer. Yes. Just leave them alone. Because in Nigeria is low, so you must be measuring some of these metrics. Website traffic and load times. Monitor to ensure system capacity, crucial with mobile shopping dominating in Nigeria. So sometimes a lot of people come through their website. Really? What's the website traffic they are tracking? You have to track 1 million. We are not even doing a good job of our website tracking because we are so heavy on referrals right now, and our WhatsApp page is doing so well. But we've studied our form that you fill, both from the website and from maybe somebody shared the link. For a long time, where we get our customer traffic from was on our websites. Then it dropped on LinkedIn. Then it dropped to DealWoman events. Then it has dropped to WhatsApp, the highest places where we get our traffic from in the DealWoman. So we've been asking ourselves, why did it drop? We realized, okay, we weren't pushing our website. We weren't really doing anything online that was different. So we've now created different other options for our channel for how they can reach us easily. So rather than just focusing on our website, we've gone to LinkedIn. We are very heavy on it. So through my own page, at least they say I'm a mini influencer on it, mini influencer. By the time you have 18,000 plus followers, they say you're a mini influencer on LinkedIn. So that followership helps to fill up, is that the word, pipeline. And then events. So we started doing a lot of events post-COVID, of course. By the time the jingles, we don't do jingles, our own jingles. We send it out to our friends, family, and our network. We believe we leverage partnership a lot, partnership, a lot. So we show up because partnership is important to us. Rather than spending money on Facebook, Instagram, where we don't think our customers are, we go to events. We pick the people there and bring them into our own network. And we do the vice. We have one or two, three companies that when we're doing stuff, they are heavy here. When they are doing stuff, we are heavy there. It's deliberate because we want to monitor, because e-commerce powers a lot of transactions in Nigeria. So if you have that at the front of your mind, remember, then you'll be able to measure the load times. Then you check your system capacity. For a long time, our system was just going down. So I just remember that, wait, Comfort, when you bought the DealWoman NG years ago, it was on basic. I better go and increase it so that you have more capacity, because we had a lot of drop-offs. So we've done that, increased and kept increasing to be able to take on this traffic. Now, you also look at it's crucial with mobile shopping. A lot of the time, people say they're sending. I asked a lady once, I said, where are you saying? She said on Instagram. Oh, fantastic. Mentor diabetes, selling business. And one day I said, I didn't see you on Instagram. Said they've taken it down. I said, they took down your page. Said yes. I said, why? So if Instagram has a possibility of you being taken down, what are your other mobile shopping strategies for your customers? Because that means that Instagram can take you down one day, or if they have brainwave, they can take you down. So I've always said, why not have a website that you can link on your Instagram page, and you don't have to spend money for websites. You don't have to. In fact, ChatGPT and all his brothers can create a website for you. I'll show you guys when we're doing the technology aspect next week. When we go to, during the session for when Microsoft will be in with us, they will take you through that. I know how to do it. I'll send you links that was generated for DIRA specifically, website. I just type, do the website with a link. If I don't want if I want it to be personalized to DIRA, I will have to pay. If I don't want to, the website is live as we speak. I will send you the links. So to measure the website in. We send our emails very early in the morning. That was important to us because we realized that, I hope I don't go off. My internet is saying again, it's slow. Let me see whether I'll go off to another one. We use MTN. Airtel. Okay, we don't have Glow. And all the numbers the company has their own packages.
ma'am. We can hear
Yes,
you.
ma'am.
Thank you, ma'am.
Hear
Right.
you.
So, for a manufacturing company, inventory could be how many cartons of this do we have? How many cartons of this equipment do we have? How many cartons of maybe products? How many cartons of products we have that will produce this amount of products? You know, so your stock generally. So at the end of the day, high ratio indicates efficient inventory management, given your logistics challenges. So sometimes you, let me give you an example. I analyzed the bank once, a commercial bank, as a head of investment banking research, in an investment bank as head of research and business development. So we're going to invest some money in that commercial bank. The commercial bank is down right now. And there was a part of the bank business where they carried stock, a whole lot of inventory of something they invested in and they didn't sell. That's one. They also carried quite a number of, so I don't know why they went into production or something, but they said they took over the companies and they have stock, they want to sell it off so that cash flow can come in and loan. That was to help their non-performing loan. So I called the CFO of the bank then, said, we want to buy the shares of your bank, but this is not looking good. And he said, no, you know, as an investment banker, you people should not look at that. Just sell it to the people in the capital market. They should just buy our shares. I said, but my job is to look at your financials and then advise who is going to buy. And people are buying 1 million naira, but some other people are buying 100 million. And he said, oh, Comfort, that's about all we can give to you, and we can't explain further than that. Of course, it's a bank, so it's not like I'm the chief financial officer of another bank that wants to buy them. But everybody that bought that share lost money. I was asking the question as an investor on behalf of my organization. Of course, we didn't buy. It was just I placed a cautious buy or not a cautious sell on it, and that was it. Or we're going to lose money. They went down the drain. They've gone down the drain right now. I'm not surprised. So inventory turnover, ability, the higher you are able to turn over your inventory, your warehouse is empty on time. It shows that your business is doing very well. If you stop and you are not selling, or your inventory, you bought things that your clients, if you're in the medical business, please, can we, yeah, please, right? So the higher this ratio, the better. So I think what we'll do is find the ones that should be high, the ones that should be low, so you can keep track. If your auditors are doing a good job, they should help you track this actually. Then I'll go to cash conversion cycle. That measures time to convert investments to cash. This really mainly for investors, but because they are putting the money into your business, they want to know what time it takes to convert that investment back into cash for them. Shorter cycle support growth, considering the impact of the Naira devaluation. Higher cycles means that we are here till forever. So if the investor looks at you and feels that, look, if I post my money, and this is being driven by your inventory turnover, your customer acquisition cost, and the rest of them, your traffic, if you are selling mostly online, then they want to know that they'll be able to determine that, you know what, it takes me too much long time to convert to cash, I'm not putting my money. So it's a metric for both the investors and the entrepreneurs. So as a business women, we need to check my investments in this business. When will I be able to convert it to cash? So you produce 1 million cartons of your products. The faster you convert it to cash, the more sustainable your business is. And the more likely you will get investors, because the investors are looking at that ratio as we are looking at it. But if you are not looking at it and expect they will give you money, they won't give you money. Now, another metric is customer satisfaction metrics, which is something like the NPS, Net Promoter Score, high scores indicate retention, importance in Nigerian marketing environment. So how is it high? Are customers satisfied? At some point in 2023, we needed to start checking, are customers really happy with us? If you don't answer that question, if their excitement around you is not high, you are going to go down very soon. That's why at times you see banks doing a lot of things, bringing in a lot of innovation to ensure that their customers are endeared to them, because it's very easy for people to port from one MTN. I don't port, so they just leave you because they are not satisfied. Are you measuring it? So for the lady that has a spa, or for the person that has a school, person that has a bakery, are people really satisfied? Measure the satisfaction rates of your customers. Measure it. At the end of this session, we're going to ask you, how satisfied were you with these metrics? In fact, I ask my staff at times, how satisfied are you with working here? Or you may think that, oh, people are okay because they are my internal customers. People are working with you. Meanwhile, they are busy in their little laptop looking for a job all over the place. Oh, you know, so if they are not satisfied, they are going to leave. I don't say people will not leave. They are my internal customer. They can leave, but at least let me be sure that I've tried my best. I can't satisfy you beyond this. So your internal customers and your external customers, because I do branding a lot, part of my portfolio while I was working was head of corporate development. At some point, I was also head of HR, so I know what I'm talking about. So in corporate development, we had to rebrand our business, and we had to work with, there used to be Enterprise IG. I think they now changed to brand something. They were South Africans. I think we spent 36,000 USD to rebrand at that time. So I was at the forefront of that rebranding. And when my consultant comes all the way from South Africa, he said, we have to deal with your internal first, your people. Start with you. Are you comfortable? Are you happy? Are you satisfied? Because by the time we do a new logo, rebrand all the collaterals, and the people are leaving the company, it's a useless effort altogether. Interestingly, it's not funny. SMEs are also caught up in this. Small businesses, whether female-led, male-led, they are caught up in this. So high scores indicate retention, important in Nigeria competitive market. So your customers can port anytime. So if you don't track it for us to look at as investors, we will go and check from our own research during due diligence. This whole thing will be done during that point when they say, oh, we are conducting due diligence on your business. Is this things they are checking on? If you don't give it to them and track it and give them reason to say, okay, your customer retention is 90%. Really? Beautiful. So you put that in your slides. Customer retention is 90%. Oh no. So the people stay here, they're ready to do business with you. So these are the metrics that are being checked. Again, there's the summary. So you are looking at the summary of your key metrics. You're looking at revenue to employee ratio, CAC and CLV, website traffic and load, inventory turnover, cash conversion cycle, customer satisfaction metrics. Please, I hope you're writing and noting. Some businesses, let me explain here. Some businesses, it will be easier for you to, if you do well in customer retention metrics or satisfaction metrics, you will do better than another company who focuses on website traffic. So we in the deal room, we are not necessarily monitoring our website traffic, but we want our customers to stay with us. It's so important to us that each customer, when they have an interaction with us, even when you pay or you don't pay, we want you to have this thing with us that endears you to us. We did a screening last week. We've not even matched that deal with one investor, but they've sent us a new client with their email doing the introduction. Why? Because of the value we brought in during the screening session. Touched a whole lot of other things. On about an hour plus session, and we cover 1, 2, 3, 4. It was supposed to be a screening session, but we go beyond that to help them, the nitty-gritty of their business. And they're like, okay, can I make this recommendation? Probably, maybe if the business just needed a screening. We don't know. We've not even responded because we've been super busy. So, but we will respond. Our response time in the deal room is not very okay. Let me not deceive you. We are working on it. We are in an accelerator, right? So I'm telling you what we too are working on. So we want to work on, but our customer satisfaction metric is very high, very, very high, very high. People have been with us, they just go on you. So people will say, so when you, I didn't hear about you. The bank that we met with today is one of our sponsors for our last year event. They sponsored accidentally. And I reached out to them. I reached out to a senior person one Saturday meeting. I met him somewhere. And I said, this is what we do. He said, hey, I didn't know that that's what you do. I said, sponsor us. They didn't listen. I said, okay, we will leave you to come to the event. Bring all your collateral and everything. If you feel that we are okay for you to partner with us, sponsor us at the level you wish you can afford. So they didn't pay us a dime. We allowed them. They were in the office. They were in that session where they were calling their office. Ask several people to come in here. Ask several people to come in here. We didn't do any adverts online. Several people to come in here. Ask several people to come in here. They came. They were just going on and on and on. And at the end of the day, a week later, I just got an alert from the bank after the program. I'm sure it will shock some of you. After the program, it has happened to a bank before too. When we launched the DealWoman, they said they wanted the number of women for one program they were doing. We said, just come. From 2023, when we had the program, it was in January that alert came because they felt we got value with these people. The same set of people, the second bank, they were in a meeting in London. I don't know if they were talking to a client of ours or something. In fact, I need to know the details. But we need to start bragging. We have some bragging rights. They're like, come for them in a meeting, and they were talking about it, and I was shouting, I know her, I know her, I know her. And I'm like, before they come and meet you, I've spoken to the bank that the bank must reach out to you. This partnership, we have to strengthen it. Ladies, that's how the meeting for today happened with their team. And they've gone, oh, we'll do this for your women. We're praying, I will send a proposal on how we'll work with you, blah, 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 blah. So these items these items, please take it seriously. You will not see it in regular classes being taught on investor readiness or investor readiness. They will teach you to pitch. They'll teach you to put your business together. They'll teach you to do analysis, whatever it is. But how the investors is thinking and how you will get the money, they don't touch it that much. Some do, but so many times. I've attended several. I attended an accelerator last year. I wanted to pitch and get to 50 million for behalf of a client. I went to represent the client, my full force. I went through 8 days of back-to-back, I think, accelerator program for a client. I can do such things. So I've been in accelerators and programs. So ladies, I almost said gentlemen, there are no gentlemen here. Methods and frameworks for evaluation. We want to see frameworks provide structured approaches adapted really for this Nigeria. Is online you see a lot of things, offline, yeah, but let's look at what are we targeting. Total addressable markets. See, don't tell us that you have 200 million people. We want to see really your total TAM. Startups know this. The ones that don't know, when we screen them, we tell them, see, go and sort that data well. E.g., for e-commerce, TAM is 200 million population times average spend, showing growth ceiling with Nigeria commerce at 6% of retail sales. So that's the story. Let me break it down. So for example, your TAM is your population, your total addressable market times the average spend. How much of this story, this total, so for example, let me use DealWoman. You have 2,000 to 5,000 customers. So we are targeting, let me bring you up to speed in our own business model. So we are targeting just about 4 million SMEs in Nigeria. And the reason is this. That's our own total addressable markets in Nigeria, total. That's our own TAM. Oh, so some people's TAM could be the 44 million SMEs, MSMEs in Nigeria. We didn't bother ourselves because we're not going to be looking at those 22 million. We have things around support that we can give them, but it's not our core to our business model. So TAM is for us, if you check what Bureau of Statistics brings out as total number of businesses, there's a slide that I did that actually speaks to this for some of our startups. So Nigeria has 44 million as at a 2019 analysis or survey done by Bureau of Statistics. Of that amount, only about 1 to 2% are mid-sized businesses. So 10% will be 3 million, yeah, and 300,000 are mid-sized to big-sized businesses. So about 10% of that 33 million fall within the SME that does about 100 million to 500 million in turnover already. That 10% is what we want to target. We don't want to deal with anybody that is outside of that as our core business model. So that means that we're looking for people within the 10% of the upper quartile of Nigerian MSMEs. So MSMEs, micro, small. We do micro, we bring interventions to it. Can you pay us? If you can pay us, we do it. But we don't necessarily target it. The reason is to answer this term, average spend. Because can the Gbogbo grow? All of the people of 44 million pay us? No, they can't. Yaba and Fisi by the side is inside that 44 million. The woman that is doing one-man business by the side of the road is part of it. We are looking for people whose businesses are registered, who are doing stuff, or startups that have the capacity to do that within the year 1 to year 2. Multiplied by average spend is about 10,000 naira at that time. If you can give us 20,000 naira, so we have an idea of our total market size and being able to calculate our potential market. Then you do a SWOT analysis. So many of us do SWOT analysis. But your SWOT analysis, you just do it. I've seen a lot. Somebody mentioned about me talking at Faith Foundation last year. Was it last year or per year? I don't even remember. When I teach SWOT analysis, and your PESU, for example, I actually look at external factors that can affect you, your dollar conversion rate to Naira. So a lot of people have done SWOT. Your SWOT is supposed to help you come back to determine how you position your organization, both financially and otherwise. Cost of power, for example, last 2 years, we knew that the way the Telecommunication Commission and the discos and the transformer has been crashing up and down the place. We needed to increase that cost by a certain percentage. So we have a percentage of our turnover that has to go to power. We have a percentage, because we deal with investors' money, we must know how foreign exchange will impact us. So I recall early last year, I said, let's buy more of some things and just keep, and we can be using. Let me give you a joke. It's not a joke, it's serious business. We have a space on Ireland here. Space wanted to put chairs there so we can have a bit of sessions. So most of our sessions are in hotels. It's becoming more expensive. If we really want to do a small program that we don't have to spend so much money, like a DIRA program that we've had in mind since, we wanted to be able to host them in our office space. It's small, but it's comfortable enough that can take some few people. And so people come in here to run trainings. Some of our startups use here as their address. We have cooperative meetings they hold in our office as well. So many of those. We have a cooperative, not DealWoman cooperative. If you want to make money, you join that cooperative. We invest in businesses. So there's a chair I wanted to buy. Nice chair, plastic, but it has this wooden thing. They were selling it for 10,000, 15,000 then, because I didn't want banquet chairs because of our tiles. And so I said, okay, we went through, and I went out to, I wanted to have an idea of that industry. Went to Eleganza, a couple of calls to China. Those are manufacturing, local manufacturers, local fabricators. I did not buy. I was speaking grammar. It sunk my heart when I came back late last year and I said, well, you know what, let's fill up this place. If we're going to do DIRA in 2025 and really start it up, some of our women will need to come for live things, live and holding sessions. Where will we host them? There's no space. And do we want to, it's not a paid for accelerator, and you have to start it before your sponsors come in. If we knew that we're going to have Microsoft's partnership, that they are sorted space at the banks, I won't buy the chairs, because I went to buy plastic chairs and cover them. I'm telling you the truth. I knew it would go up. I didn't take that business decision then. I have to pay more for it today. So if you know the strengths if you do your PESU, identify your external factors that are affecting you, internal factors that are affecting you, you take some serious positions ahead. I hope that the women at the Faith Foundation and all the women that we talk to and all the men and all the businesses, it's also strange. In 2014, I was already advocating that business plans should be written at 500 naira to $1. In 2016, 17, I started doing $1,000. By 2020, 2022, I was already doing 2,000 to $1. Because do you want to be getting me to write your business plan? Already that time, I was earning 5 million to write a comprehensive business plan. So your business plan should at least serve you for 3 to 5 years. So those are the reasons why. Now the investors know this. They know these things. So when you come without your framework for evaluating your strengths, your scalability that we've talked about, and you are not picking the methodologies rightly to evaluate yourself, you won't get money. And interestingly, the business doesn't grow because there's the key numerals you need to be picking up and watching. And then the financial projections, detailed forecast in Naira, essential for investor presentation, considering currency fluctuations. In this part, your financial projections, please, ladies and gentle ladies, have two. One in Naira and one in dollars. The one in Naira, have the one that will go in, and then a third part that will take you into a projection. So scenario 3, scenario 1, Naira as it is. Scenario 2, Naira in conversion to exchange rate. Scenario 3, if it goes up from 1.5, it's not 1.5 now. How much is it? 1.5 to 1.6, 1.7. Just do 2,000. Do 2,000. Like I said in the first session, there may not be a necessary trigger right now because the elections have come and gone. That will trigger it to 2,000. But to be on the safer side, just use 2,000. If investors ask you, you say, well, our currency, so this is the beautiful thing. If you use 2,000, then you have to project your cost too using that. Because it's every time you go to the market, your raw materials are going up. And a lot of businesses were taking on ours. I'm like, why are you taking on ours? These things were very obvious. So if you know that you are going to go to Ogun State to buy cashew nuts, because you package cashew, you have paid ahead for that farm since, based on today, because some of them will willingly take that money and go, and then, because it's a vicious circle and unvicious circle, they also need the money to plant or increase their, whatever they are doing, increase their yield. So maybe if you pay them ahead, that ability for them to produce for you at same price is there. So you still get it at that same price. But don't do the thing that the northern people have done now, that I wanted to go into rice business in December. My teammates, they will be laughing if they hear this. The woman, I told the woman that, 20 million to bring how many bags of rice? I think a trailer truck, a trailer load of rice. And I want to do rice business. I'll still do it. And so I got this person, a woman that really felt, she went to Nasarawa and came back, said this is the amount. I like the amount. And I had promised her that, okay, if I don't even do 20 million, maybe I'll do 10 or 5 million. Get me a quarter truck load that I have a space, I'll drop it. And then I can start selling to the market. It was close to December. My friends were like, oh, by the way, I sell. So I know what the market, I know how the dynamics, I sell a lot of things. I help my customers sell to be able to have track record of understanding how the market works. So please, I'm not a consultant that just speaks and writes anything. I've sold cookies, I'm selling wine, I've sold sold chips. These are I sell. I like selling. I'm a born sales girl. I like the road. I sell. If I like something, I sell. I want to start selling some product. In fact, you people will be my customer. One of our factories, one of our clients that we're raising money for, my daughter has been saying, see, I want to sell that product. So we'll sell it to your kids too, because it's a nice product. It's cheaper than your cornflakes and your Kellogg, or you can add it to it. So we're coming to you. You are my customers. Right. So suddenly I now said, come for put on your thinking cap and go and check what will happen to this business by January, February. Or else you go and invest 20 million or 10 million or 5 million, whatever it is you are investing. Because I bought some from her. I love the rice. It was nice and clean. Except that it was produced there, it was okay. So if you want to buy rice, let me know. So the rice come, so she calls me, oh, can you transfer the money now? I want to go to Nasarawa. I said, hold on. I went into put on my thinking cap. And I realized that there was a glut already for rice in Nasarawa. Products were glutted. People had already imagined that as it was going up, it would be keep it going up. So they were hoarding. The figures were there, it was there, they were hoarding. And I said, if they are hoarding rice, these people are going to pour that rice into the market by January. I will lose money. Sometime in 27, 20, I just told her, mommy, so and so. I'm so sorry, but I won't be able to do it. Can we do it next year? Let's prepare for this. She felt a bit like, oh, maybe I just raised her hopes up and the rest of them. I would have been crying now. Honestly, I would have lost money. And one thing I hate is lose money. The wealth of knowledge I have with figures and analysis, why would I lose money? I don't like losing money. It's not like I've not lost money, but I'm one of the people that haven't lost money where people have lost money. So I'm like, no, I don't like losing money. My capital is very important to me. So when I saw the things coming out from the market, I said, oh no, rice importer, rice exporter. I've been in deep trouble right now. Currency fluctuations, because our currency stabilized. So that racketeering that was happening with our currency has slowed down. People were holding against that projection of going up, but it has slowed down because the government pumped money. And then Oga Dangote, the hype around that refinery starting off already cut off some people's export requirements for dollar. So our currency will naturally stabilize a bit. That's why there is now, and then we're going into the rainy season where they do not have the capacity to, there are no silos to keep these things. So the dry season where they will keep it is going off. They're coming into January, February. The rain is coming, they just throw the thing outside. Foolishness. And so it drops the market. If you check our trajectory in the last 20, 30 years, that's how our markets behave. So question is, the investors knows this. If you're not tracking it on how you position your financials, we'll be in trouble. Okay, so there are case studies that we've looked at. I want to end here. Our practice here is let's leave where we are here. There's still a lot of things there, but I think it's a lot. We're almost on 3 hours, right? Faith. Good. So practical application to this learning is, we'll stop here. Hopefully we can take the other sessions. Maybe if we can hop up on a WhatsApp meeting, maybe during the weekend, let me know. Or maybe I'll take a presentation and send it to you. but you will get this and you can read up the rest of it. Practical application ensuring learning tailored to Nigeria. I want you to do this, evaluate your business using factors and metrics. So you get the assignment and to do for this particular session here. Calculating your time, performing your SWOT analysis, and then you develop a scalability plan with specific goals and timelines for preparing for investor discussions in Naira terms. So thank you, ladies. I think I'll stop here so that we don't have too much to talk about today. The framework will drop it. The framework for your SWOT will drop it. The framework for your TAM will drop it. And then the scalability factors and metrics based on what we said today. So if we are up to it, if I get like 10, 15 people, we can finish up the sessions when we, during the week, or maybe when we come on Monday. So on Monday, we are going to be reviewing everybody's business model. If you want to tweak it based on the sessions today, that's fine. But we'll send you these documents. I've asked Faye to ensure that every outstanding document goes. Business models can be submitted up until Monday morning when we meet. We're meeting on Allen Avenue. If you can make it, if you cannot make it, we've made provision for a screen in our little room. The screens are there already, and we'll be waiting for you on Monday just to have like a one-on-one conversation. You need questions direct, you want to see us, want to meet with me, and probably maybe if one of our partners or two of them can join, whether virtual or online, we'll see how that goes. So the floor is open for questions. Yeah, Faith will drop the detailed address and the map for how to join on the WhatsApp group. We'll drop all of that. But we are off Allen, actually. Off Allen, Ikeja, Lagos, Nigeria. Adeyinka, yes, good afternoon. Nice to have you once again. You have the floor.
Good afternoon. Your favorite person is here. First of all, thank you so much. I really, really, really appreciate. I mean, this is like mind-boggling, all the information and the knowledge. So first of all, thank you so much. My question is, you can say it's a question and a request. I was wondering, would you have like an accountant that you can refer one to help with, you know, coming up with this? Because I'm not a figures person. Like I told you, my business is a startup, even though I've run another business for over 20 years, but it's a consultancy and it's different. And so I need someone to basically guide me through that process, especially
So
when it
we
comes
have
to
one of our partners on this journey.
Okay.
Wells Accounting. They should be here sometime next week. Join us. Let me hope that maybe she can join us in person on Monday. I'll see if I can. We had a bit of serious instability this week, but we've sorted it out. So we'll be able to reach out to them. Our internets were off. In fact, the live meeting was supposed to be the first day of this session this Monday, but we had a whole lot of constraints around getting that done. So hopefully we're here on Monday. No, hopefully she can join us on Monday. If she can't, there's another person here, but she is already signed up to work with DIRA on this project. Yeah. Yes. So and they have this, they have all of that accounting thing, and it's
Great. Yeah, okay, great. Thank you very much again. Thank you.
So we are going to be speaking to them to ensure that whatever you get, they also help companies raise money. I mean, stabilize to raise money, so working on from the audit and accounting aspect of things. So that's why we are happy to have them work with us. Ejiro, your hand is up. Go ahead, please.
Okay, good afternoon, ma'am. So I must confess that this has been one of the best trainings I've ever experienced so far, honestly. Because you just make it so simple so easy to understand, because for someone like me who's coming from the career path, like trying to switch, to the entrepreneurship part, there were a lot of things I needed to understand. And while I take courses and try to know many, many things like that, it can be confusing, but you're giving me a very solid foundation. And I tell you, ma'am, I'm so grateful. So, but my question is, you talked about the customer acquisition cost and the customer lifetime value. So if I got you correctly, the customer acquisition cost is basically how much it takes. That's comparing how much it took you to get the consumer, the customer, and how much the consumer spent. Yes. Okay. But I'm not very clear on the customer lifetime value. Like, I think maybe you can help me expatiate on that a little.
So
yes,
that
ma. And then
that is to how long your customer is able to stay with you without going to, so you sell bread, for example, and there's bread A and bread B. So they came to me the other day and said, mommy, Boku bread is nice. I said, I'm not buying Boku bread. Just buy me so soft. Mommy, Boku is nice. I don't want to buy Boku bread. Please just leave me with my so soft because they are soft. And mommy, try it. I tried it. I didn't really. And then in my house, they were like, so that so soft means that they've been able to maintain me as a customer for like 3-4 years now and still counting. Some of us, we just like old English. I don't like old English. So, but old English know their customer and they are tailoring that taste to their customer. So their acquisition cost will be, what does it cost so soft to acquire me as a customer? What does it cost Old English to acquire their customers as customers? And for how long? Because if your customers keep dropping off, it will cost you more to be getting people to buy from you. So your social media or marketing costs will go from 10 naira to 20 naira to 30 naira to 40 naira. Meanwhile, if you check some businesses in your business, it goes from 10 naira to 20 naira. And it remains at 20 naira, their customers are increasing. How long does your customer stay with you? That's just the question. Yes. Do they stay with you for a long period of time? Do you know that the deal room was because a customer was staying with me and like, you must, this thing you are doing, you must remove it from CAO partners. You must stabilize it. You must bring it. It's a customer. And when we do our 5-year anniversary, I'm going to invite him. It's one of our customers. He just felt, the value you brought to help me with this thing. So one day I asked him, I started something that's called the deal room. Say, yes. So a customer built us to this point. The other day, he still called me, I'm doing this. What do you think? I've retained a customer for over 10 years. One customer. So question is, what does it take you to get the customer first? How quickly are you able to lose it? If you lose customers quickly, there's a problem. Because they are not referring, they are not staying with you to refer. No, you see, come and join us, come and join us, come and join us. Then there's a problem. Does that answer your question?
Yes, ma. Yes, ma.
If it doesn't, let me know.
Okay, I think I get the general idea, but is it possible to be able to calculate that since you don't really...
Yes, based on the multitude of data with you. And you'll be sure data analysis does that well. So let me tell you what data can do. If you have data on when they come in, when they leave, maybe in the last 2, 3, 4 years, you can do a prompt and say, look at this data to give me the customer acquisition ratio, customer turnover. It has to be deliberate. So the other day, when I wanted to check the people that has the people that fill, all of you that fill the form, we've run an analysis on you. It's that analysis that told me that 50% don't have website. I didn't have to check. I just copied the data, asked data analysis to please analyze this data. And it gave it to me from in charts. About 50% of the people that registered do not have websites. 40% of them wants to raise below this, wants to raise this amount. 20% of them are raising this amount based on that data that you people were filling on your form. So yes, you can know the retention, you can do it. It's just data analysis. Your customer, let me give you a good example of why this is so important. One of the companies I mentioned it to, I mentioned a 2 billion naira company that we did analysis for. One of the other analysis we did was a customer analysis, because when you are doing a turnover of 2 billion and you are going to the bank, some of us will remember this example. You are going to the bank for OD, overdraft of 50 million naira to pay salaries every month. Something is wrong. But question is, you 2 billion was supposed to be coming into your company for 1 whole year now. Yes. Where is the money? Apparently, people were not paying up. So I wish we had an accelerator that was in-house and we can really sit down from morning to night. And this lesson I want to give out now is very easy, but I'll summarize it to answer Ejiro's question. So we sat down and I said, Comfort, 2 billion, 50 million. If I'm a banker, I even think you guys are serious because I'm making just money off you. The bank will be giving you because they're making some money. They are making money off you. So I said, let me do a customer analysis. They have then about 1,000 plus customers. I had to have that 1,000 lists and analyze the customers and realize that 20% of the money they were making was going into receivables. You know what that means? Money is coming. We have supplied goods. Money is coming, but it has not come into our accounts. The ideal thing is 60 days. By any standard, is supposed to be 45. But at the most, no matter what happens, 60 days, your money should come back. It gets into 120, 121 days, they are not paid. In a whole year, one single entity is owing 100 and something million, 200 million. How do you want to survive? So we did a customer analysis. So when you do customer analysis, when we did it, we realized that, if I remember, I hope I'm giving the right metrics, 20% of those people they call customers were not paying back under 45 to 60 days. Same customer, one of them has held on to almost 200 million for the last 3 years. And they say they are doing 2 billion naira turnover. They were not doing 2 billion naira turnover. They were actually doing, based on our maths, 131 million naira turnover. Yes. If you do the maths, actually, because the money don't come in. How we did helped them to get the money. That company is super big right now, and they are strong in whatever they are doing. In fact, maybe I'll get the CEO one of these days to come talk to us. I don't know if it will happen during these cohorts because I've not even reached out to them in the first place. So maybe the second cohort. And that was it. We had to do a customer analysis and then realize that customers were also dropping off. You have 1,000 people. Please, we share attendance link. You have 1,000 people, about 800 of them just come and go. So it's always just newer people that were doing that turnover for you. It's not So they had to work on retention. Customer service has to be 100%. Today, I bought something from them last week, and immediately I saw it, and the response was so fast. I said, wow, these people have moved on. I was super proud of them and super proud of their story and being part of it. Because everything in the recruitment, it changed. In the logo, we changed. See, this is who we are. This is how we're going to. They got somebody who has experience in a multinational to drive what they were trying to do. And then they reposition themselves. And they are now manufacturing some of the things they were importing. Super excited for that brand. Does that answer your question, AGO?
Yes, ma, it does.
If it doesn't, please let me know. This is a program where I need to give you clarity without the English, or without the data or the figures, without the slides. We just want to talk, and yeah, so this is the session. Please, if you don't understand, ask again.
Yes, I think I'm very clear on this, the customer lifetime value now and how exactly I can get that data. So, but to draw a point from this, like you just said, if I were to talk about my total addressable market, like you mentioned while you were training, so am I saying that if I have a potential market of, let's say, 200 million customers, for example, are you saying I should narrow it down to the smallest I am targeting?
From that total addressable market, I teach that a lot, because that's the strategy that works for most of my businesses that I advise. So this is coaching now, or is it what? So your term, reduce your term to, see, the total market I can address based on where I am is not 200 million, never 200 million. We don't have the capacity to reach 200 million. So within that, remember, I don't know if I finished our own story of the deal. So we narrowed it down to those 4 million. So from that 4 million, we want to reach just about 10% if we charge 50,000 based on our model that we're working on. So we eventually narrowed it down to 1,777 people, businesses. And that's what we are targeting. It's easier. So you streamline it, and then you say, you narrow it down to, this is where I want to target. So you know where your money is coming from. By the time you tell an investor 200 million, he knows that he doesn't know, you don't know what you're saying. Yes, you don't know what you're saying. Right. Any more questions? Ejiro, are you okay?
Yes.
All right.
Yes,
okay, Joy.
Thank you very much for this session. It was fast. It was an eye-opener. I really love the simplification, and thank you so much. So regarding the market size, I think what you taught today is quite different from what we normally know. But I think I will look into that regarding the spend you mentioned and calculate that. But my question is, most of the time you are being asked of the term, the sum, and the sum. So my question that does apply, because from the data you are giving now, from what we know before, the term is now the sum. So my question that does it not apply, like the sum and then the sum?
Where we talk about the term, sum. Your term will not be these global markets. Your term will be, you still have your term, sum. You still have it. Term, sum. You still have it. So when we get into that, we narrow it down when we're writing our pitch deck. The term here is know who your market is, where they are.
Okay.
Know who that market is, because we have a lot. I've always been of the opinion that people wrong words, Tom, Sam. I'm like, what are you saying? Narrow down your markets. Narrow it down. It's like when you say agile, I'm developing my own school of thought that says, you know what? Rather than saying agile, for example, I say you must be ductile and malleable for Nigeria. Agile works, yes. But ductility and malleability is what Nigeria needs. That means that in being I have a paper on it. I've taken it when I taught at the Daystar Business Academy last year. You must be malleable and ductile, stretched, broken, be able to come back like a metal. So your addressable market, because we have 200 million people, that is not your total addressable market. Your total, as far as I'm concerned, in what works in terms of being able to actually reach your customer, your total addressable market is the market you can address. What's that total? There is a population of 200 million. Out of that population of 200 million, what's your total addressable market? You get the point?
Yeah.
So if your total addressable market is 22 million, that's okay for you. That means that your model is somehow, your model is different from our model. But the Nigerian population is 200 million is not your total addressable market. A lot of businesses make that error. Your total addressable, the market I can address. In fact, so many times the addressable market, total addressable market is only Lagos.
Yes.
But somebody has now added Ibadan and the Port Harcourt figures. Because all the SMEs are in Lagos. So if you are positioned, your business can only run in Lagos for now, your total addressable market has to be the people inside Lagos. If you don't narrow it down like that, that's why you will end up with a sum that is too big and you will not be able to sell because your strategy to reach them will be weakened. It's bigger, it's bigger than what you really can address. So when we go down into the marketing of it and curating, we'll go through it next week. Is this an introduction course? Yeah, thank you. This is an introduction to next week, but we're dealing into the figures now, but I don't want to run cliche, some, tan. I just want you to understand what we're trying to do so that when you sit down with yourself, you will be able to now, okay, you know what, Joy, the total addressable market is 1 million. Out of that 1 million, I can effectively reach 200 for a time T now. And then I'll start projecting. Nothing says that your total addressable market will not change in the next 6 months to 1 year. But you now see, so because as your addressable market is changing, your cost will be changing. So your financials, your projections, if your acquisition cost for a customer under the term of 1 million is 1 naira, on 2 million is either increasing or reducing based on efficiency. Do you get it? How efficient you are? Because remember that you don't have to increase cost when you are scaling. We need to check your efficiency. So when you come next week, we will actually be narrowing down into all of that marketing and then writing your documents, as it were. Okay, so we have a lot of questions. We are almost done with our 3 hours, right? Wow. Okay, who came first? Right, Victoria.
Hello.
Okay, we're on the 3 hours mark already. I was told that we've done 3 hours, and data says that after 2 hours, people get tired. In a niche session like this, 3 hours is the max. So I'll take just a few questions more, and then you can call it a day. Except if you are here, and then you can ask more questions. I'm here to. You have the.
Good afternoon, ma.
Joy, did I answer your questions properly, please? Are you okay with the way I answered it?
Yes, ma. Yes, ma. Yes, ma.
Thank you, ma. Thank you, ma. Right. All right, you have the floor, ma'am.
Good afternoon, ma'am.
Good afternoon, ma'am.
Thank you so much for the enlightenment. It was a big one, mind-blowing.
Go back to the slide and look at the methods. So I'll share again so I can speak to it. Okay, so this is it. So we can ask the questions. And so I'll go up a bit. Okay, so the methods and the framework, right?
Yes, ma'am.
So you are going to check your total addressable market for evaluation. This number 4 points, right?
Yes, ma'am.
So yeah, so you're looking at your addressable market, which is a question Joy and I think what's her name again? So I want to be able to refer to us, call us by our names. Lucy, right? Where you so the total addressable market, your SWOT analysis will help you to identify all of it.
Okay.
Your business model Canva, which you have done or used. So that's why the business model Canva is very important. The SWOT analysis, you will have to do it. We'll send it to you. I said that the framework will draw the activities that you need to do from this. And then the financial projections. We are getting into the financial projections next week. So the term is just to understand your total market. Who are you addressing? The SWOT analysis required, the business model Canvas. So you've done the business SWOT analysis, you need to do that. And I'll also ask you to do PESTO. I'll just put it in PowerPoint editable. So you put your own there that works for you. And then the term is just to sit down and say to yourself, where is the population of the people that I want to address and how much are they able to spend? The population here doesn't have to be the population. This is term for Nigeria, by the way. I hope it's not confusing us. This is term for Nigeria. The term for Nigeria is 200 population multiplied by the average spend. The term is your total addressable market times the spend.
I didn't get it, ma'am.
Yeah. Is it clear now?
It's
so
not clear.
For a school. Sorry? I didn't get you. Who is speaking? I'm still with Victoria, right?
Yes, ma'am. The term is not clear, ma'am.
Okay. Your school is in Ikorodu.
All right, ma'am.
Are you getting children from K2?
No, ma'am.
Are you getting children from Abeokuta?
No, ma'am.
Your total addressable market will be children inside Ikorodu.
That's correct, ma'am.
Yes, that's your term. That's the total market you can address. You can't go outside of that place. Your total market. Anybody that will consider bringing their child to your school has to live in Ikorodu. So the population of the children in Ikorodu address. Because children are many in Nigeria.
Yes, ma'am.
Yeah, we're a very young population. I mean, our elderly, I don't know where we've put them, but we have 80%, I mean, our population faith. 80% of our population are are young, 60% are youth, and they are churning out children. Even if it's one, that means that we have 60 million, 60%, we are 200. 60% of that is about 120 million already. 120 million human beings give birth to one child. As let's say male and female equal, that's 60 million children already. How many are in Ikorodu that can attend your school? That's your term. You get it?
Yes, ma'am. Thank you, ma'am.
You have to drive your strengths. So your key strengths may be we're a Christian school. If your key strength is you are a Christian school, that means you are targeting Christians. What percentage of those children are coming from Christian homes?
All right.
That's where you then position yourself for, okay, this is the kind of strategy I would employ to begin to reach those people. Okay, so there's a lot of hands up now. Victoria, are you clear? Don't
Yes,
worry.
ma'am.
The first week, I don't want us to go into a confusion. That's usually what happens. But let's take it bit by bit. So the activity will come relaxed. You'll be able to do it.
Okay, ma'am. Thank you, ma'am.
Is it Bukola now? Yeah, Bukola, please go on. So I'm not, let me show full meeting sign. I'll come back to my, where's my,
Thank you very much, sir.
Yes, ma. So,
okay, so I got a bit of understanding from my question from the answer to the last question. I went to, I was trying to relate my business to time and our capacity.
Yeah.
So I was going to say, would the capacity of my arm in production, would our capacity relate? Can we use say if my capacity is, say, I can produce 10,000 loaves daily, would I call that my term? Because sometimes what I can produce, I might be able to sell off.
If it go.
So we'll go to all the total markets that you can address. I don't want to get into, so a lot of my mind is unstable. So the sum and the sum, where you now go down to breaking down your term into the ones that you actually should target, narrow it down to the targeted one. So let's wait till when your total addressable market, would you be able to address these markets? Yes. Yes, that's why we don't want it to extend. Chioma, yes, you can exit. Thank you. So we will break it down to where you go from your term to your sum to your sum. Just wait, we'll break it down. So I don't want to get into it today. Does that answer you, ma'am?
Yes, ma'am. Yes, ma'am.
Okay, yeah. So we'll get into it.
Thank you very much.
Yeah. So I'll take the last one so that everybody can go. Chinoye, do you guys still have any questions?
Good afternoon, ma. Well, not exactly. What you've spoken about, the last speaker, you've addressed most of the things. Yeah, but the only thing I just wanted to add was that for me, at the moment, it's like a one-man show business, So I'm operating from my kitchen. I call it kitchen facility. Hello?
Yeah. Yeah, I said that's fine.
So most of the things I'm going to do with the metrics is more projected what do you call, how do you use the term?
Yeah,
The financial term.
forecast, projections,
Forecast,
yes.
yes. So more of projections, so that's okay, right?
Yeah, it's okay. In fact,
Okay,
it helps you for somebody that is starting, so you have clarity in terms of how you actually should run the business.
Okay, ma'am. Thank
All
you.
right. Yeah, thank you, everyone. Thank you, ladies. Please, some people have called me separately and I've attended to them. We still haven't dropped our office hours, but we meet on Monday somewhere off Motayo. As she drops it, the address, she will drop it on the group chat. So you have an idea. So if you are going to come live, please let us know so we know how many people we're preparing for as well. Okay, so thank you,
Hello,
everyone.
for Monday?
Yes, for Monday.
Okay, all right. Okay.
So if you have any questions, you have any documents, all your businesses, please come in on Monday. We're open for you from 9 a.m. We have a joint session starting by 12 noon on Monday. So, but if you want private sessions, come in before 12. The opening, the joint session for those that can't make it in person will continue online. So, but there's an opportunity for us to meet, wine, dine a bit, and then do some work one-on-one. So, yeah. Thank you. All right, thank you, everyone, and have a very good afternoon. The activities for today, we'll drop it on the, it's not a mandatory activity, it's a mandatory activity for us to get into the second week. The mandatory activity for you is to drop your business model Canva via email at dealwoman@dealwoman.ng.com. Yes, Monday is a physical session. It starts 12. We'll start an opening around 10, 11. So if you come in on time, that's good for you. You can have an office hour with me early before we start. Ask any questions. Right, thank you so much. Thank you. Have a beautiful evening. Thank you, everyone that showed up today. It's been an exciting time with Cohort 1, first week. Thank you and have a good afternoon. So we're closing out right now.